In today's video, we have one of my favorite guests to speak to, that is Gregory Mannarino. Now, funny timing because I followed Greg's work pretty closely, and he's been talking about how oil is going to be heading higher. There's a good possibility there'll be some type of war. Now, you were talking about this long before there was even the Russia stuff going on in the media, but here we have it today, the first inklings of uh, uh, maybe an all-out possible war. I guess we'll see what happens. So we're going to be breaking down war with Russia, gold, silver, commodities, the stock market, what's going on, and not only Greg's predictions, but some advice that you can start to utilize in your life right now to kind of make sense of all of this craziness that's happening. So make sure you smash the like button on this video if you enjoy it. Give us a comment right there down below for the good old fashioned YouTube algorithm. We'll link Greg's channel and website right there down below. Shout out to our sponsor, which is Vizsla Silver, one of our favorite silver and gold mining stocks. So thank you, Vizsla Silver, for being our sponsor. And it's good to see you, Gregory.
Great to be here. Thanks for having me. Perfect timing. I can't believe it. Honestly, could it have worked out any better? I don't think so.
Yeah,
Really.
I texted you so early in the morning. I woke up like so early, and then I saw the news and I was like, all right, I'm just going to get out of bed. And I sent you a text. Well, we're going to have a lot to talk about today.
Yeah. I barely slept last night when I heard about this. It's a terrible thing to see, this is not just about, the markets. This is a human element to this. And I hate to see people suffer in any way, shape, or form. But unfortunately, that's the way it's going. But yeah, we do have a lot to talk about. So I don't even know where to really start. What do you want to talk about first?
Yeah, well, let's start with helping make sense of what's happening. Last night I saw some of the footage of Russia entering Ukraine, and then we had a lot of individuals saying, well, now we need to go to war with them. We saw stock futures down really big. Oil's up, uranium stocks are up a lot, but everything else is down a lot. So how do you make sense of war with Russia, stock market down?
I'll tell you, I think that Putin just bailed out the Fed. I really, really feel that way. I've been explaining to people for I don't know how long that we're going to see things that you won't believe moving forward here. Central banks are determined to continue to inflate. Despite the fact that we're hearing about a taper, which never happened, I urge people to check this for themselves. Go to the Federal Reserve's own website, look at their balance sheet, look at last November when they said they tapered, there was no taper. There's been no change to the slope or asset purchases. They've continued unrelenting here. The Fed does not want to stop inflating, period, the freaking end here. And they will create reasons to continue to do what they're doing. Central banks are in control, full control. They're going to continue to inflate. And all I can say is I believe right now at the Federal Reserve, they're doing cartwheels around the office. I mean, now they have the excuse they needed, or maybe they even engineered this whole damn thing to continue to inflate. If anyone believes that the Fed is going to meaningfully raise rates here with this going on, you got to be insane. It's just not going to happen here. There's been no taper. There will not be any meaningful rate hikes. There will be a hike. I still believe that come next month, but it'll be infinitesimal. This gives the Fed the green light to continue to print, just like I've been saying is going to happen. Right now, yes, it was interesting. So we saw, obviously, stock futures crater on the back of this incursion, this war over there. I told people exactly how the market would react. I told my lions out here to keep powder dry. I'm buying this dip like crazy. What are we seeing with regard to the debt market? We watched the 10-year yield drop, and that's not what we're afraid of, okay? What we are afraid of is seeing the 10-year yield spike in an uncontrolled fashion. That's the big one, okay? The big crash that everyone's looking for. And we have some people month after freaking month saying, oh, this is the month. It's going to crash this month. Oh, maybe it's going to be this month now. Oh, sorry, I was wrong last month, but it's going to be the next one. Can't make that stuff up. They don't know what they're looking at. All they're trying to do is get people to watch their channels. And the fact of the matter is, until we see an implosion in the debt market, we're not going to get the actual crash. Sure, this market can fall without that happening, but we're not going to get any big crash until we get the debt market implosion. And what we have just seen here with Russia, Ukraine, it's like I said, it's going to give the Fed the green light to keep rates lower for longer, for much longer. And as you alluded to in the beginning of this, is this going to expand? Is this just going to be a regional conflict? I think people should be ready for anything. I said this in my morning video. A major false flag event to cause this to expand wouldn't surprise me. It shouldn't surprise anyone, because again, if they manage to, and if they want to, they will. It's very simple to drag the people along. If they feel that they need to expand this war, and I'm talking about the central banks, I'm not talking about Putin, who in my view just bailed out the Fed. But if central banks feel like they need a larger war, they'll get it. And they're going to string the people along by creating fear, confusion like they always do. And this will give them the green light to continue to print. Their goal is to be the one world government we've been warned about for years. They already are. They run the entire financial system, which means they control the world. We have no representation anymore. It's an insane thing for anyone to believe that presidents, kings, queens, monarchs, or dictators run a damn thing. No, it's the banks. They run it all, the central banks more specifically, and they're going to keep this going as long as they have to. COVID ran its course. What a miracle. Now all of a sudden we have a war. Oh, wow. Imagine my shock. Oh, COVID's getting better. Look, and now all of a sudden we have this. I mean, it's crisis into crisis, and then we're going into a much bigger one. I sincerely believe, and I've been warning about this, an energy crisis, a full-blown global energy crisis, and much higher inflation is coming. So I want people to be prepared for that.
I want to talk about the energy crisis, but first, can you explain a little bit of why you say that directly or indirectly Putin bailed out the Fed?
Oh, it's so simple. Because now this gives the Fed the green light. Like I said, the Fed, I'm laughing, but I really shouldn't be. The Federal Reserve is now in the right spot. Now they don't have to worry about having to taper in any meaningful way. They never wanted to. The Fed wants to continue to inflate. Every central bank around the world wants to inflate. The more they inflate, the more debt they issue, the stronger they become exponentially. Look, I don't know if you can see this here. Let me show you this. George Gammon gave me this, okay? I say end all central banks, not just the Fed, all right? They are the most evil, corrupt organizations on the planet. And their power resides in one thing, their ability to issue debt. We can take down the Federal Reserve or any central bank if we prevent them from issuing one single dollar of more debt. Just one. That's how vulnerable they are. And they know that. This is why they keep creating reasons or engineer reasons or whatever it might be to continue to inflate. The moment we stop them from doing that, the whole fiat monetary system dies that exact nanosecond. It's never going to happen. They become too powerful. The Federal Reserve, I don't think people really understand how strong they are at this particular time, especially because they have the full backing of the United States military, its entire arsenal, including nuclear. And they will point that at anyone they have to make sure they fulfill their end game. That is to continue to inflate, to become the world government, to own it all. And that is what they are doing. That's the process of it all. And all these other things are just distractions. It's very, very sad to see what's going on here. A slave planet with slave individuals, slaves to debt. And something, I mean, I've been telling people about this for over a decade, and it's right here. It's in our face. Energy out of control. We currently just hit my target of $100 on crude, which I said was going to happen eventually. Of course, I got laughed at and ridiculed. Oh, Greg, it's never going to happen. Well, guess what? We're here now. A lot of things are going to unfold moving forward. But look, we just got to know what we're looking at. We got to realize that we are not in a crash mode with regard to the market. And we can see that because of the debt market. The stock market is nothing but a derivative. I've been explaining this to people. It derives value from what's happening in the debt market. If we see, for example, like today, when these attacks have started, the 10-year yield drop, what does that tell us? Cash is making its way into the safety of debt. The dollar, or the relative strength of the dollar, went up over like 1.5%. What a move. Again, this is a safety trade. And then you get the fear trade where stocks sell off. And when there's fear in the market, that's when you got to look to buy. And I've been telling people this for the longest time. It's the people who don't understand the market, who go running for covers, sell their positions. And then you got someone on the other side, a guy like me, scooping it all up on the cheap. I mean, that's what I do. That's what my lions do here. Period. The end. We don't rattle. You know what you're looking at. Yeah, sure. Markets go up and markets go down. It's a random walk with an upward drift. But if you realize that the entire mechanism is, again, a derivative of the debt market, and you're watching action in the debt market, you're sitting pretty. I mean, I've been telling people to hedge their portfolios for the longest time, being in risk on assets, meaning the stock market, and then risk off assets like physical gold, physical silver, platinum, palladium, other commodities as well. And when I say risk on, I mean people should be in large cap, dividend paying stocks. I happen to really like the banks right now. I think people should be in oil producers, Exxon Mobil, Chevron, BP. And if they want more exposure to commodities, there's you can do an exchange traded fund like a PDBC. I mean, there's lots of things that you can do here to keep yourself on the right side of the freak show. And that's all this is. We just got to know what we're looking at and understand what we're doing and why we are doing it. And there's a lot of people panicking right now. I don't know about you, but my email box is like a freaking Christmas tree every day. People are afraid. I understand they are afraid, but that means they're not hedged. They're not in the right spots, and they don't realize what they're seeing. They're not looking over at the debt market. If you turn on the mainstream channels, they have you focused on the Dow Jones Industrial Average, not the broader market or the S&P 500, the 30 largest companies in the world. Oh, look what the Dow is doing. Look what the Dow is doing. But they keep people brainwashed like that. And, and people get afraid. I don't know. It's a mechanism.
And you see a sell-off out of fear, but you're saying a move higher because the stock market is a derivative of the debt market. And with a crisis like this is the excuse for the Fed to thus issue more debt, not raise rates, and pump more into the system. So that's why you're saying we aren't going to see this crash that a lot of people now, when they woke up today, got afraid of.
No, look, people have been talking about this crash over the past few months. Let's put that into perspective real quick. We've had a market that has gone virtually straight up for, let's see, Trump's entire presidency, and at least up until 2 months ago of this current freak. Okay. We got all that, but we had more record highs with regard to the S&P 500 last year than we ever had in history. And now people are freaking out just over the last 2 months because the market has been under some pressure because the Fed has been playing their game. You got these people coming out of one side saying, oh yeah, we're going to raise rates in a meaningful way. And then the other freaks on the other side, oh, no, don't worry about it. We're going to keep, the easy money is going to keep coming. And this thing right here, in my view, is the biggest great event that could have happened to the Fed or any central bank, because they're going to continue to print. And that's my one fear is, are they going to expand this? Is this going to be a regional war that they're going to expand so they can continue to inflate? I wouldn't be surprised to see that. I really wouldn't. But what's really going on here is a complete wipeout of the global middle class. And I've been explaining for I don't know how many years, 10, that we are moving back in time to a two-tier society, a feudal system, feudal overlords. The rich and the well-off can not possibly have done any better than they've been doing over the past, since Obama took office, all through Trump, right now too, with this current freak. And the middle class is just evaporating. They're going away. They're becoming extinct. And now with this current inflationary event, which is going to get much, much worse, in my view, look at energy. I mean, we are right at the beginning stages, in my view, of a full-blown energy crisis. And this, if anyone believes that this is by accident, they got to be insane. They've got to be insane. Nothing that we are seeing is by accident. Nothing.
Greg, can you talk a little bit about that energy crisis? You mentioned it twice. What do you mean by energy crisis, and where do you see it going?
Sure. I mean, right off the bat, I've been telling people in warning that we are going to see crude oil hit $100 a barrel. And, again, all the naysayers, Greg, you're wrong. Of course, I was not wrong. Look, I'm not always right. That's the truth. I want people to understand that. I'm right most of the time, anyone who follows my work. But with this one, I got it right. And I'm raising my target on crude to like 125 and probably not too far off. If people were to just look at how many products are made with crude oil alone, it's over 6,000 products. Now, if we understand that crude oil is now skyrocketing, what are they going to do? They're going to probably, open up the strategic reserves. It's just a Band-Aid. It's not going to fix anything. And of course, the powers that be realized that this is all going to happen here. They realized what would happen here with energy prices. They didn't do anything to stop it. Of course, natural gas has gone freaking crazy. Right now, I would have to say that Europe is in a much worse shape than we are here in the United States with regard to an energy crisis, but it's going to come here too. It's getting bad, but it's going to get very, very bad moving forward. And people are going to be, what are they doing now? This is so sad to me, honestly. And I said it would happen. I explained to people that as inflation would surge and the middle class is being wiped out, people who used to be in the middle class, what they would do, what we're going to do, is go out and start borrowing more, taking out credit card loans. And this is exactly what has happened. They're trying to maintain the illusion that they are in the middle class. And all they're doing is assuring themselves a spot in the lower rung of society here. They're burying themselves. This is part of the slave planet and the slave state that I've been explaining. This is what they're doing. And it's terrible to see, but that is happening. And I think that's going to accelerate moving forward. Unfortunately, an energy crisis of huge proportions has the potential to unfold. And I want people to be ready for that too. So with that, what do? How can you take advantage of that? I mean, at least not lay down and get slaughtered, is get yourself some exposure to energy, to commodities. Look, I've explained to people for years that when the big one happens, when we get this debt market implosion, which I think is going to happen. I mean, it's not just me. You got billionaire hedge fund managers who are now seeing it. I was probably one of the first people to explain how I believed it would unfold. That is, at one particular time, we're going to get a massive sell-off in the debt market, which is going to cause rates to spike in an uncontrolled fashion. That's why we don't get afraid of when the 10-year yield comes down. We get afraid of when it spikes in a very rapid fashion, 2.5%, 3%, 3.5%, 4%. And I think that's going to happen. That's going to put pressure on stocks and it's going to sell off all of that. And that cash is going to move into other assets. I believe it's going to go into commodities across the board. I've been explaining this forever. Physical gold as well, physical silver, platinum, palladium, more than likely. And I also believe cryptocurrencies. I believe that we are going to see, for example, the market capitalization of cryptocurrencies 3, 4, 5 times what it is now when we do get that implosion here in the debt market. And look, I don't trade cryptos. I am a holder of them. I've been buying since about Bitcoin 3,000, a little under that. I bought all the way up to 41,000. That was my last buy. We are now under that last buy. But anyone that got in on Bitcoin, when I said to, or any of the other cryptos except one, Dash is my one crypto that I'm underwater on. One. I own like 8. My biggest holding would be Bitcoin. I have a fair amount of that, a very fair amount of it. But I still believe we haven't seen anything yet with regard to the price action of cryptocurrencies. I think they're going much, much higher. With regard to gold and silver and other commodities, they're going to skyrocket when we get that movement of cash from one set of assets into another. Again, debt market implosion, cash leaves the debt market, that puts pressure on stocks, and you get a risk-on cycle, which we have now, cash going into the stock market, or at least it was up until 2 months ago. And then, we get this wave of cash that moves over. But I still believe that central banks are going to support the markets. They're going to buy the market. The Federal Reserve is going to buy the market. They have a trading desk. Look it up for yourself. People don't believe it, but they do. The New York Fed has a trading desk. What do people think they do with it? Anyway, I still feel like the market's going higher, especially because central banks are going to continue to inflate. I think we're going to see a new Cold War, a new arms race, and all this is going to do is cause central banks to do what they want to do. That is continue to inflate, and that's going to inflate the stock market along with it.
Okay,
and
so
the value of the dollar.
And the value of the dollar as they continue to print more is what you're saying?
It's going to evaporate. I mean, I've explained to people they're going to see 2 things. One is a no-brainer in my view. That is they both are no-brainers in my view. You're going to see the relative strength of the dollar high. That means the relative strength of the dollar versus other currencies. And you can follow this by looking at the Dixie, DXY, the dollar index. But the absolute strength of not just the dollar, but all these currencies in aggregate is going to free fall as it is now. Henceforth, while we are seeing global inflation, I hope people understand what they're looking at. I really do. I don't think they get it. But thankfully, they have shows like yours where they can get a handle on it.
One of the things that I really appreciate about you is you've helped me be able to make sense of everything that's happening, because when all of this was happening, I guess if we take it back to the first sell-off that happened once the lockdowns began around March 2020,
Yeah.
I kept thinking, crash, 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 and not just like a quick crash, but like the end of the world crash. But you helped
Not
me
just you,
understand.
not just you. Everybody thought that. I mean, but what did I do? If you know my work, I said get long COVID. I said buy this, and it was an amazing call. And of course, I was again, Greg, you're wrong. This is the big crash. No, and I'm telling people right now, look, I am not looking to capitalize on people's illnesses or war. All I'm looking to capitalize on is this market. For me, when we saw what was going on, when the market got hit, all the COVID nonsense, and the stocks were selling off, well, that looked like an opportunity to me. Could I have been wrong? Absolutely. But was I wrong? No. With regard to the current environment, getting long Ukraine, Russia, at least for now, until the debt market tells us differently, I will continue to use this as an opportunity to buy companies that I want to hold for the long run, dividend paying companies I want them to pay me to own their stock. And then I'm going to trade around these positions. I have a whole new perspective on as to trading for the last few years now. I am a net seller of options. I think most people who follow my work know that. I don't really buy calls and/or puts unless I'm looking to hedge my portfolio, which I covered recently, but it's very rare. Generally, I'm looking for reasons to buy companies that I want to own on the cheap. And I think that's the opportunity right now. I really do, because I sincerely believe the Fed will keep rates lower for longer in light of the current event. But look, you had it right too. When a lot of people believed that was going to be it, the market's going to go down, they're going to shut down the global economy, the market actually went higher. But I can understand your understanding, your perspective, why you thought that, because you believe me, you were not alone. The vast majority of people believed that was going to be it. And at first I was kind of like, whoa, you know what? Maybe that is going to happen. But I'm like, what does this do? This will give central banks the ability to inflate even further, which is exactly what they did. Look at the Fed's balance sheet. And what did that do? Record high, record high, record high, record high. It's
and
crazy.
Then once I learned from you that the market was a derivative of the debt market, then it made me be able to understand it more. And one of the things that I really like about your work is, you're pointing out the inherent unbelievable corruption, not only of this system, but the disaster that it's creating, but you focus on what you can do about it. And so, you've talked a bit about that, but let's look at, if we're having these incredible moves of inflation, what do we got to do, right? We've got to increase our purchasing power. We've got to participate in this wealth transfer. So you're looking at commodities, gold, silver, crypto. What do we do to prepare ourselves for these bizarre times?
Well, I think you just laid it all out. I mean, you can take advantage of this from so many different angles, in my view, and I try to cover them all. I understand that maybe people don't have some of the resources that I have. Okay, that's the truth. I happen to be doing well in my life, and thankfully, but I think people need to be hedged. I think they need to be if they're able to do it, they need to be spread out here. You should absolutely be invested, at least some of your portfolio, in physical assets, commodities. I love gold. I love silver. It's my favorite undervalued asset of all time. And I've been saying that since, I don't know, for 10 years. I also feel people need to have cryptocurrencies in their portfolio. Now, I understand people can't handle the volatility, and that's fine. If you can't stand the space, if it can't work for you, then don't be there, because it's going to create fear and you're going to make bad choices here. But you need to be on the opposite side of this trade of the debt bubble. We're in a hyper bubble in debt. There's no doubt about it. We're going to get an implosion. We're going to have clues as to when we get the debt market implosion. That is by watching the 10-year yield more specifically, but of course the entire yield curve. But I really focus on the 10-year yield. But the 10-year yield is the benchmark. That's what everybody looks at. And that's going to give us the biggest clue. When we start to see it spike, we know we got to run for the hills. But until that time, in my view, again, this is just my opinion, and people are entitled to theirs. Until we see instability in the debt market, realizing that the stock market is a derivative, we will continue to buy companies in the market that we want to hold. Buying physical gold, physical silver, platinum, palladium, obviously great plays. In my view, cryptocurrencies as well should also be in your portfolio. Exposure to more commodities via that ETF I spoke about. There's other ETFs. And I tell people, just let your fingers do the walking. Open up like a search engine and just what are the best commodity-backed exchange-traded funds. I mean, there's a whole bunch of them out there with different risk profiles. So just look at them, read the prospectus. It's not hard. It's written in plain language, and people can make a choice as to how they want to expose themselves. But you can't do nothing. Let's put it that way. As you just said, we're in an environment of surging inflation, and in my view, we haven't seen a freaking thing yet. It's going to get much, much worse. So you need to do something. You want to stay in a fiat currency that its absolute value is dissolving. I don't care what fiat currency it is. You're in the wrong spot. You got to get out of it. And it's another one of my themes forever. You don't want to be in a central bank issued note. You want to be out of that system in some way, shape, or form. That's why, again, another reason why I like cryptocurrencies. People don't seem to grasp the concept. A lot of people. It's very sad with regard to cryptocurrencies, because I think there was, and still may be, a lot of opportunity to circumvent the current debt-based system. But people have been so brainwashed into thinking that they have to be in a central bank issued note. It's very hard to break that thought process, especially when you have presidents who say, "Oh, I really don't like cryptocurrencies," or whatever it might be, or you have regulators, or you have more calls for regulation against it because they see the threat to the system. They do see it, but right now it's infinitesimal, because if you look at the entire market cap of crypto, it's about the same as one Dow component, which is nothing. But I still feel in the event, and when we get that implosion in the debt market, it's going to go up much, much higher, 3, 4, 5-fold the whole market cap. So that's how you take advantage of it. Look, I'm very simple to understand. How I outline what people should do, I think, is extremely easy. If you have the ability to be diversified, you should be. If you can only be in one thing, I'm going to say it's this. It's physical silver. I got it all over my freaking desk. That would be it. And it's a tangible asset. You can hold on to it. But again, there are so many ways to take advantage of it. So many ways. Some fancy, some not so fancy. I try to keep everything simple so people can follow along.
So let's end with this, Greg. I know you got to get going. So first, let me just kind of recap, right? And I'm glad that we got to talk today, because I think you'll quell some fears. What you're saying is logical. It makes a lot of sense. We're not seeing the debt market falter, and this is probably going to be a great excuse for them to issue more debt. Now, where do you think it goes from here? It's what's the date today? It is February 24th today. And Fed said 7.5% inflation recently. There's been all the fears of the market sell-off. Now we got impending potential war, people calling for war, all types of crazy stuff, right? We had Canada, seemingly one of the quote unquote free countries, locking people out of the financial system. So you got all this crazy stuff, but where do you think it goes from here through the rest of this year and moving forward? What's next?
More control. How about that? More control, more fear, propagation of fear. Look, I think the biggest thing on my mind right now is wondering if this is going to go beyond a regional war. Is this going to expand? Are they going to allow it to, or engineer it to? Maybe is a better word. We'll see. We'll see where that goes. But the key to this entire thing is, again, we can look at all of this, but the key is what you just mentioned yet again. It is the debt market. The debt market is the key to every freaking thing that we're seeing. And until we have instability in the debt market, and I hope my Lions will remain steadfast. Look, there are people who are jumping ship and they don't know what to do. If you are not a steady player, you'll never make it through the bear markets. Okay. I'm not saying that we're in a bear market. We are in some kind of funky event that's going on here right now. Again, look, it's fear for the most part that's causing the market to react the way it is. It started when the Fed talked about, we're going to meaningfully raise rates. The market was adjusting to that. Then we got this whole thing coming on here. But look, there are people running for the hills right now. I think they're making a big mistake. They're obviously not thinking longer term. To get through anything in life, you got to be steady. You got to remain steadfast. You got to know where the opportunities are. It's really not hard to do, I think, if you understand the concepts that we spoke about today.
Here's last question, and then I know you got to go. Right now, right? There's so much going on, and there's a lot of things that we literally don't control. And there's so much fear and confusion. It's hard to make sense of it. And so there's a lot of emotions. Can you talk a bit about managing those emotions, or how you manage fear to control what you can control, just so we leave somebody with one last positive?
True. Look, understand that they want you to be afraid. That's number one. Okay. They want you to be afraid. If they can make people afraid of anything, one thing, I don't care what it is, that you become mind controlled. And with regard to the market, it's just a matter of how I stay relaxed in this market is understanding the macro picture, what is really going on in a larger scale. And then once you realize what's going on the bigger scale, then you kind of zoom into things here. And if you're, like I said earlier, in risk on assets, large cap dividend paying stocks, for example, and then you're in risk off assets, physical gold, silver, platinum, palladium, commodities, cryptocurrencies, which are extremely volatile. Okay. Let me just touch on that real quick. With regard to cryptocurrencies, nobody really knows how these things are going to respond to a major financial shock to the system. I would expect more volatility. They're too new. We can say with a high degree of certainty, whenever there's a financial shock, you see the 10-year yield drop, you see the dollar go higher. Generally, you see gold and silver gain. But with cryptocurrencies, they're too new. We don't know how they will respond. It could be a big sell-off, which I think would be followed by a big rebound, or they could go higher. They're just too freaking new to realize what they're going to do. But in my view, why I hold them is, again, for the implosion in the debt market, because I believe at that point we're going to get a very large increase in its market capitalization. But again, staying spread out, trying to be invested in things that you believe in, and keeping your portfolio balanced keeps you balanced. I can sleep at night. I don't worry about seeing stock futures drop 800 points. It don't faze me at all. I'm not a day trader. I am not even a swing trader anymore. I own companies that I feel are going to do well longer run. And then I do two things when I'm holding a position here. So this is another reason why I really don't care, for the most part, where they go. Like I said, markets go up, markets go down. It's a random walk with an upward drift. You know that. It's a debt market. But you can hold, let's say if you hold one position. Let's say, for example, you own company XYZ. Okay, it's in a long-term uptrend over years and years. Okay, the chances of that long-term uptrend changing are probably pretty low. Okay, so what do? You get in here, you own that company, and then you could do one of two things. I like to sell puts, which is a long position against a particular asset. 15, 20% out of the money. You get paid up front. You're collecting premium. I do it all day. And with regard to, there's another way you can do that. You can take advantage of something called credit spreads, which you're, again, a net seller of options onto the market. This is not a hard thing to do. You can Google it. There's all kinds of YouTube videos on how to do it. It's not hard. And like I said, taking advantage of the market, you don't have to be a rocket scientist. You just have to know what you're looking at and realize they're going to try to make you afraid, which is going to paralyze you. Don't let them do that to you. So just stay relaxed.
How do you screw your head on right to stay on top of your game? What's your tool to screw your head on right to stay on top of your game?
Just realize what you're looking at. Again, and to me, the key is, again, the debt market. The key is the debt market. And the second key is, well, it's probably one and the same, is understanding that central banks are going to continue to inflate. I don't care what they say about, because there's been some talk recently about the Federal Reserve balance sheet, unwinding of the balance sheet. I don't believe it's going to happen in any meaningful way whatsoever. I think the Fed's balance sheet is going to vastly expand moving forward, because their goal is to own it all. And again, if people understand that's the key. But the sad part of this entire thing is we've allowed these institutions to literally run it all. They control the world, and I can't imagine a way to get rid of them. I wish we could. I don't know. I wish, if you knew a way, let me know, and we will spread it everywhere. We got to get rid of these institutions. They are public enemy number one. They're a curse upon this world. You got to get rid of them. We got to get rid of them.
Greg, I appreciate you for helping us make sense of everything that's happening. Everyone listening, make sure you smash the like button on this video. Give us a comment right there down below for the good old-fashioned YouTube algorithm. Copy and paste this link and share it out there on social media. There's a lot of people scared, confused, trying to make sense of what's happening. I think Greg explains in a very rational, easy to understand way. So please share this message. Give us a comment down below for the good old YouTube algorithm. I'll link Greg's YouTube channel and website right there down below as well. Greg, I want to thank you for your time today.
Great to be here. Thank you.